Are you tired of the constant ups and downs of the stock market? Do you want a way to build your wealth that feels safer and more reliable? So you need to look at real estate, specifically private money lending. And real estate, which offers a way to build a long-term wealth without dealing with tenants, property management, or market issues. In today's video, I'm going to walk you through how real estate lending can provide a stable and secure path to wealth that grows over time. Let's dive in. All right, we all know that investing is the key to building wealth, but not everyone has the stomach for stock market volatility. The ups and downs can cause problems, right? We want more stability. One day you're up, next day you're down. It's stressful. That's why so many people are turning to real estate, specifically private money lending in real estate. It's a lot safer, more predictable way to grow your money. Real estate has been proven wealth builder for generations, but there's the great part of it, right? You don't even have to own the property yourself to benefit from it. By lending money to real estate investors, you can earn strong returns while letting someone else do the heavy lifting. It's passive, it's predictable, and it's backed by a tangible asset, which is the real estate itself. So, whether you're a new investor or someone looking to diversify, private money lending could be the perfect fit for you. Let me share a quick story. I know a retired couple who had, been investing in the stock market for a few years. They couldn't handle the ups and downs anymore. They wanted something more stable. They didn't want to deal with tenants or maintenance, but they did want to generate passive income. So they started lending money to the real estate investors. After just 1 year, they were making 8% annual returns, paid monthly, and they didn't have to lift a finger. It was the perfect solution for them, and it could be for you. Step one, y'all know I love going into steps. It keeps things simple and I keeps it organized in my head. Real estate is secured investment. One of the biggest reasons real estate is a great investment is for the long-term wealth is that it's secured by the property itself. When you lend money in real estate, your investment is backed by something that's tangible, bricks and mortar. You can touch it. This makes it fundamentally safer than other types of investments, like stocks, where you have no physical asset to fall back on if things go wrong. Think about in this way. If you land $100,000 on a property worth $150,000, your loan is secured by that property. If the borrower doesn't pay you back, you can take ownership of that property and sell it to recover your money. That's a layer of protection you just don't get with other types of investments. And in many cases, the property itself is increasing in value while you're earning interest on your loan. I had a client who went and lent $250K on a property. A year later, the property's value had risen to $300,000, and they earned 8% interest on that loan. Even if the borrower had defaulted, they would have ended up with the valuable piece of real estate that had, appreciated in value. So let's move to step two. It's going into real estate appreciations, which is what I was just kind of bringing into. Over the time, another reason why real estate is such powerful is the appreciation that it brings. Well over the stocks and other investments can fluctuate wildly. Real estate tends to increase in value, especially in strong markets like Oahu or in even places like Dallas, Texas. When you lend money, real estate, you're not only earning interest from that loan, but you're also benefiting from the property's rising value. Let's look at the numbers. Historically, real estate in the US appreciates around about 3% to 5% annually. I think Hawaii is probably a little bit better. Depending on the location, that means that the property you lend on today could be worth significantly more in 5 to 10 years. And while you're not the property owner, the appreciation adds an extra layer of safety to your loan. The more valuable the property becomes, the more secure your investment is. Here's another example. A friend of mine lent $150K on a property in the neighborhood that was undergoing some revitalization. Over the next 2 years, the property's value increased by 20%. He earned interest on the loan every month. When the borrower repaid the loan, he had made a solid return and the property is worth much more than when he started. It was a win-win. Now, I kind of want to go into generating that passive income. One of the biggest advantages of private real estate lending is that it allows you to generate passive income instead of working for your money. Your money ends up working for you. And unlike being a landlord, you pretty much have to tenant, you have to deal with maintenance and repairs. Lending is completely hands off. So let's break it down. When you structure a private lending deal, you can choose to receive monthly interest payments. These payments come in like clockwork, providing you with a steady stream of income that can use to cover living expenses. You can reinvest it or save it for future. You don't have to worry about collecting rent or fixing, leaky faucets. The borrower is responsible for managing the property, and you just sit back and collect the interest. I know an investor who lent $100K to a developer working on a multifamily property. He structured the loan so that he receives 9% interest paid monthly. That's $750 a month, completely passive. He didn't have to do anything other than just collect the checks. And because the loan was secured by a property, he didn't lose any sleep about the safety of his investment. So next thing we're going to go into is step 4, the benefit of long-term stability. So real estate is known for its long-term stability, unlike stocks, which can be impacted by the market news, earnings reports, and even social media. Real estate values tend to move more slowly and predictable. This makes it an ideal investment for those who want to build wealth over time without worrying about that day-to-day market swings. For example, even during economic downturns, people still need places to live and work, which helps keep demand for real estate relatively stable. And while there may be short-term dips in the property values, over the long term, real estate has historically appreciated in value. Let's talk about Oahu for a minute. The real estate market there is seeing steady growth over the past decade, with property values increasing year after year. Even during economic slowdowns, the demand for housing on the island remained high because of the limited land availability. Lending on real estate in such markets offers a level of stability and predictability that's hard to find elsewhere. Let me share another example. I know a small group of investors who pooled their money to fund a real estate project. They weren't interested in owning the property, but they wanted the security and passive income that the real estate lending offers. So over 5 years, they earned consistent returns, the interest payments, and saw the value of the property increase by 25%. They didn't have to manage anything. They felt confident and their money was safe, and the entire time they was sleeping easy. So if you're looking for a way to build wealth that's stable, secure, and provides passive income, real estate lending is an excellent option. It's backed by a tangible asset, benefits from long-term appreciation, offers that hands-off way to generate returns, plus it's a lot less stressful than the stock market. If you found this information helpful, don't forget to subscribe, hit the like button, and check out our next video, where we'll dive into how private lending can help reduce your tax burden. Thanks for watching, and I'll see you in the next video.